So this is a first. I want to do a comparison between Visa and Mastercard. This is the first time I've done a comparison video, so let's see how it goes. Let's talk about Visa first, or as it was originally, BankAmericard. This was an interesting story. Um, I found a couple history videos that talked about it, and I read some articles from way back when. In September of 1958, BankAmericard was airdropped unsolicited to about 60,000 people in Fresno, California. The goal was to replace revolving credit accounts that were floating around trying to get connected. Some banks had tried this. They had sent out general credit cards, but they couldn't get enough merchants to accept them. They couldn't get people to use them. And somebody at Bank of America decided that he was going to convince the board of directors to try this. So they tried 60,000 people in Fresno, and the test did not go well. Within a couple of years, the number of delinquent accounts was 22% instead of the 4% that they expected, and the leader of the program resigned in disgrace at the end of the following year, in 1959. But, of course, it was too late at that point. Horse was out of the barn. And here's the trick. The gentleman who had come up with the idea had never worked in the credit department, so he didn't know what terms to use, he didn't know what kind of contracts to develop. The bank came in, took it back over, put somebody else in charge, and made it work. Then they started signing license agreements around the country with other banks to say, you can issue a BankAmericard under your brand. And that was great. 10 years later, 1968, they decided that they needed to set up a committee to look at issues within that licensee program. And in 1970, Bank of America gave up control to National BankAmericard Incorporated, NBI. This was an independent Delaware corporation. It was designed to transform the entire system into a franchise system. Now, Bank of America continued BankAmericard because they were Bank of America. But they did it outside of the United States, not within the United States, for a while. In 1974, the International Bank Card Company was formed to manage that global network. And then in 1976, they decided that they wanted everybody under the same brand. And international banks balked at somebody telling them that they had to use a Bank of America card name. So they changed and came up with a new name, Visa. Meanwhile, in the other corner. So the beginning of credit cards is really interesting. At the end of World War II, restaurants like Diners Club, they started creating revolving issues of credit. And if you go to a bar, you can say, hey, put this on my tab. And then you hold your tab overnight. They might charge you a fee, they might not. That's up to the bar owner. But that's a revolving credit account. And when more and more companies decided to try and do this, hey, I want to buy this suit, but I don't have the cash today. Can I put this on my tab and come back tomorrow or next week when I get my paycheck and pay it off? Sure, we can try to figure that out. That's how this started. Between 1960 and 1966, 10 new cards were registered and introduced in the United States. But between 1966 and 1968, 440 new cards were issued. A lot of them were under the BankAmericard brand, but the market wanted competition. So a new organization was formed, the Interbank Card Association, with that little I logo. Not much of a brand. They came up with the two circles. Mastercard. 1968, they expanded. Mexican, European markets, Japanese markets, then Africa, Australia. In 1979, Mastercard International takes the reins. So it's all in parallel. What happened to Visa is happening with Mastercard. In the 1980s, they expanded to Asia, Latin America. In 1987, the People's Republic of China. In 1988, the Soviet Union, before Perestroika and before Glasnost. Then came the IPOs. So these were all private companies, and they were doing gangbusters, but they wanted an IPO. Mastercard beat Visa in the race. They had their IPO in 2006. They sold 95.5 million shares at $39 a piece and brought in $3.72 billion. Visa was a little bit laggy, but look at the result. Okay, here's the schedule of when things happen, but 406 million shares at $44 a piece, $17.86 billion. Winning the race doesn't mean you really win, but we'll look at where they are now in a little bit. Here's an important criteria. Here's an important piece of data about these two companies. They don't issue the credit. They are the brands. They are the franchise brands that banks and financial service companies use to issue credit. They are the networks that manage the flow of money across the globe. If you look on the S&P, they are on information technology. They are in the data processing and outsourced services industry. Data management, because that's what money is. It's data. First impressions. So, when I recorded this, and it hasn't changed that much, we'll take a look on Seeking Alpha. Stock price, both are pretty high. Visa's at 197, Mastercard's at 305. When I took these numbers down a couple days ago, they're probably changed a little bit now. Are they expensive? Yes, they are. Is it worth it? We shall see. Are they household names? Yes, around the world. Their customers, their direct customers are banks and financial institutions. Their real customers are honestly anybody who uses money. They're both global companies. Their market caps, Visa 416.59 billion and Mastercard 303 billion. Remember their IPOs back here? Like 100-fold. Well, 100-fold for Mastercard. I don't know what that number is. Again, information technology, data processing, and outsourced services. So let's look at some growth graphs. Here's price and volume for Visa. For the last 10 years, 197%. That's just price. Here's Mastercard. Coming from about the same point. Remember their IPO dates. Okay, May of 2006 and March of 2008. So these companies have not been on the stock market for much longer than 10 years. Visa in 2008, Mastercard in 2006. So they're both about the same. But this is their current price when I took these. How about dividend history? Again, they're in parallel. They're almost the same graph, except for the scale, but even that's not much of a difference. Visa is paying 0.3, Mastercard is paying 0.4. Their next dividends, well, Visa just paid. They announced on April 22nd that they were going to pay 30 cents a share on June 2nd, and they did. Okay, Mastercard just this last week announced another dividend payment for 40 cents in line with what they had been paying, payable on August 7th, and their ex-div date was on July 8th, one day after the announcement. but they pay quarterly, so it's not too late for next time. Let's look at yield on cost. It's going up as we go backwards in time. That's always a good thing. Looks like they had some good spikes during the recession in 2007, 2008, and 2009, and then they're recovering in price. That's what that means. How about Mastercard? Well, same thing. Here's that same time period, but this was a really good time to get into them. And this, for 14 years, that is showing all. So these are the early adopters. These are the people who bought it right after the IPO. And they're getting 35 or so percent. That's cool. Total value. So this is the first time that I've done a comparison video. So I wanted to show this. I post these as comments in the group on various stocks all the time. The Dividend Growth Investing group on Facebook. This is my favorite comparison chart. Total return is what we want as investors. So Mastercard is actually doing better if you go back 10 years. We'll look at this in a dynamic way when we go to Seeking Alpha. So here's Mastercard, Visa, and the S&P. From the very beginning of the decade, either one of these stocks would have given you a lot better return. Now let's do something different. This is a comparison between Visa and Mastercard. Three different portfolios. In the first one, it's split 50-50. Portfolio 2, everything on Mastercard. Portfolio 3, everything on Visa. How did they do after 10 years? $10,000 in the split 50-50 would be worth $189,000. If you just put everything in Mastercard, $218, just everything in Visa, $159. Not really that much of a difference, but this is impressive. 29.16, 30.78 for compounded annual growth rate, and Visa 27.26. I think I heard somewhere that Warren Buffett is getting an average of 19 or 20. If you'd bought these, you could have beat that. This looks a lot like the Seeking Alpha graph. So this is the mixed, this is Visa, and this is Mastercard. What else can we learn from this? Quite a bit. Let's see. Everything is in financial services. What else? Let's go back here, because I want to explore some of the charts on Seeking Alpha. So here's Mastercard. Let's look at current dividends. Current dividend yield 0.54, 40 cents a share quarterly. Payout ratio is nice and low, giving them plenty of room to grow. 5-year growth rate. This is what brings them up so high on my ranking scores. Their growth rate has been over 20% for all 4 of the year categories. Let's take a look at momentum. 10-year total return, 1,345.84. Where are they now? 295.68. All right, so they've gone a little bit down from when I recorded them originally. Here's price return going out to max. Here's their IPO. Total return, again, out to max, but let's take out the S&P. 7,021%. You can see that their dividend has never really been that big, but with the dividend growth, you can still see a difference. Let's take that out to max. About 400, 500 difference. And here's that same price chart that I showed you. What else can we learn here? We've already seen everything else. Let's take a look at Visa. Their dividend growth is very close. 20%, just about, in all categories. 0.62%, 30 cents a share quarterly. Payout ratio, again, nice and low. Fantastic stocks. All right, so here, that's the history. Now let's look at some estimates. On dividend stocks.cash, let's bring up the screener. And let's look at Visa first. Visa. Okay. Stability scores. Dividend stability 0.95. Earnings 0.95. Cash flow 0.95. Revenue 0.98. You can't really get much higher than that, can you? What do the experts say is going to happen? Are they overvalued? Probably. Yeah, they are. But look at this cash flow. The line is following the operating cash flow graph, and according to that, we've got room to grow. This is what the payout ratio has. Even with it being as overvalued compared to today as it is, this is just the end of 2022. What's going to happen later than that? They're going to continue to grow. Let's take a look at the same thing for Mastercard. Stability numbers: 0.89, earnings 0.93, cash flow 0.93, revenue 0.97. Very stable company. And very similar graph. So here's value based on earnings per share, adjusted earnings per shares. How about cash flow? Well, according to this, they are overvalued to the point where at the end of 2022, the average is going to be a little lower than where they are now. So this was a good time to get in, and of course this was. This was the bottom of the COVID crash. So they're a little overvalued right now, but again, we do invest for the future, and if they reach par sometime in early 2023, it's up from there. These companies are going to continue to make money. So we've looked at the history, we've looked at the now, we've looked at a little bit of estimates. What about the future? Well, they're going to have some competition. The entire industry is, because their platform to transfer money around the world is being challenged by new technology, by blockchain, by cryptocurrencies that cost almost nothing to transfer instantly across the world. So watch the news and see how these two companies are going to be joining that space. They're going to be joining in because they don't want to lose their profit margins. They're businesses, they want to make money, and if they're smart, they can figure out how. And I want to be part of it. Good luck, everybody.